Welcome to Tuttle Talk on 1190 AM. Now, live in studio, your host, local real estate expert, Andy Tuttle.
Good morning and welcome to Tuttle Talk on the Real Estate Radio Network, where we teach you what the rich and the banks do, not what they tell you to do, and where we dispel the misconceptions of financial wellness in the local real estate market and show you how following some basic principles really can free you up to focus on the other important areas of your life, like your friends, your family, and the community. It's the most important hour of radio every Saturday, right here on Clear Channel 1190 AM KFXR in the great state of Texas. Fantastic state that we live in. Very lucky to be here. I am your host, Andy Tuttle. Thank you so much for joining me. If you want to talk to Matt, because we're going to talk about some really important estate planning issues here, and we're going to talk about, to some of you investors, how to set up to make sure your rent houses are protected correctly and your assets, your personal assets, are protected correctly. So if you want to talk to Matt during or after this show, call us 214-736-9696, 214-736-9696, and we will get you in touch with him. He is my special guest today. He is an estate planning attorney. He's also, my goodness, we'll talk about his law firm, but he is a partner in Pratt, Aycock and Associates, PLLC. He has been in this business a long time, and he's got a big heart for making sure you and your family are protected, and he joins me here today. Matt, thanks so much for being here.
Hey, thanks for having me on the show, Andy. I really appreciate it.
You bet. Formally, now you're actually invited to the show.
I'm actually officially on it now.
Yeah, that's right. Before, who's this Matt guy? We don't even know him. But now everyone knows you. So, yeah, thanks. Okay, I'll always like to give you a little history when it's your first time on the show.
Sure.
So before you got into really estate law, and I know you do business formation and you help with document preparation and all those things. You have many lawyers at your firm. But what did you do before this?
Well, the first thing that I did right out of undergrad was I was going to go into computer programming, and the beauty was at that time, the market was great, and then we had the burst of the bubble with the .com and everything collapsed, and all of a sudden there's no jobs in that industry. So I decided, hey, real estate looked like something that was pretty cool. I was catching it on an upswing, and then obviously whenever it went down, I went to work in the default servicing world, and that's when I met my partner Greg Pratt. We did a few things for some of the larger banks like Bank of America and, Fannie Mae and places like that. And then we decided to do our own thing about 3 years ago. And that's when we started Pratt and Aycock. So, we thoroughly enjoy this industry. It's one of those things, once you get into real estate, you do not get out of it. And I don't see me doing anything else but real estate, and the things that relate to it.
Right. So what all areas do you cover at your law firm?
We cover most anything except for violent crimes, of course. We have a lot of different attorneys that work at the firm that have their own areas that they like to focus on. As far as the areas that I focused on, myself, it's real estate, and then, of course, estate planning and business formation as it relates to real estate. And so it all, those three, typical things do go together very well. I'm what's known as a transactional attorney, not a litigation attorney. So we have litigation attorneys that do whatever, we do family law, we do foreclosures, we do foreclosure defense, pretty much anything you can think of that would get you in a courtroom, we do.
And you have a very unique program, too, from short sales that you help realtors out with, and it really helps the sellers, too. Can you talk just a little bit about that? Yeah,
we started that, right about the time whenever the banks began thinking, hey, a short sale is really a good thing for both us, the owner, and everybody in the middle. But because what it does is it keeps that property from becoming an asset, an REO asset on our books. And then, it was taking the lenders, 2 to 3 months before they could even get something they foreclosed on listed. It was generally in horrible condition at that point in time. And so it was just costing them a lot of money. And my partner Greg and I looked at that as an opportunity to help a lot of people not have a foreclosure on their record. And so what we started doing is negotiating the short sales as part of the transaction. We've got, 6 dedicated negotiators that's all they do all day. They work with the lenders on a regular basis, and it's a cooperative thing. It's not an adversarial thing like most people would expect. And the lenders are usually very open to doing it. And the beauty of doing a short sale versus taking the foreclosure is you usually get, some walking money. So, $1,500, $3,000 is pretty common for you to get as a seller that you can use, and that's very helpful for a lot of them. The other big thing is you can qualify for a mortgage much sooner after a short sale than you can after a foreclosure, assuming other credit issues are the same. I mean, I've seen somebody they had to do a short sale for a relocation, and they literally qualified for a mortgage on a new home after 6 months. So now everything,
big difference.
Yeah, it's huge. If it was a foreclosure, you're probably talking 2-3 years easy.
That's right. Wow. Minimum 2 years with FHA. With some other exceptions, usually it's 3 to have that happen. So it is a lot different. You've got to make sure those are things to take into account. And again, a little bit of that walking money is very helpful if you're in a tight situation versus a foreclosure. You're definitely not getting anything.
Nothing.
And it's going to crush your score worse.
Well, and some of them are even going after you for deficiencies on the foreclosures now.
Yeah, that's true. So you don't want any of that business. Okay. So talking about your estate planning and moving to that, is it true that only about 1 in 20 households have a will or trust or some kind of probate avoidance in their life?
Yeah, it's very, very low. It's a small percentage. Most people don't think about it being something they need to worry about when they're young and when they're just getting started out, just buying a house, just having kids. That's the most important time to do it. And so many people don't do it then. And it creates an extremely difficult situation on your family and your friends. If you die without a will, there are things that what we like to tell people is if you want to know what would happen if you died without a will, we'll be happy to tell you. And if you like that result, go for it. Don't have one. But most people are not happy with what the government will do with your estate and how they will distribute it to various people if you die without one.
So get into that because really I think you're right. I mean, first of all, if 95% of Americans don't have this super important, very inexpensive document. It's not in the subconscious. We're not teaching this stuff. Right. We're getting all this crud media, but this is important. It's critically important. What makes it so important? Is it really that important?
It is. One of the biggest things that we see that comes up very regularly is someone will die and they have a minor child. And for whatever reason, structurally in their family, some or all of their assets would be going directly to that minor child because they don't have a trust mechanism or anything set up for the minor. For that minor to be able to sell that property in order to pay for their living expenses, food, clothing, shelter, whatever, they actually have to not only go through guardianship court, which is extremely expensive and time-consuming, you have to hire 2 sets of attorneys in guardianship court, and so it just really sucks the value out of that estate, and that could have easily been avoided for a few $100, and it's going to cost thousands and thousands of dollars. And so that's what most people encounter that's dangerous. Another one that's pretty common is where you have a child from an ex-spouse, and now that you're remarried, 100% of your community property, let's say you own a house with your current wife, 100% of your community property is split 50-50, okay? So your current wife gets to keep her half of the house. Your half of the house goes to all of your kids. Well, guess what? That kid from the prior marriage, guess who has the first right to be the guardian of that kid's estate? The ex-wife. And so do you really want to put your spouse in a situation, after you're dead and gone to where she has to get your ex-wife's permission to refinance the home or sell the home or do anything with the home?
Or your ex-husband, either way.
It works either way. It's just men generally die before women, so I always use that example.
Smarter women, you guys got it together. You girls got it together. So on that, that is fixed if you do a will?
Yeah, it's completely fixed. And, I mean, there's nothing to it. It's extremely simple. And, when people hear how cheap it is, they're shocked, and it does depend on how complex we're going to get. But usually, you're talking like $400 or $500 tops for a will. And, and there's places out there like ARAG and other prepaid services. If you get prepaid legal type work, it's free. I mean, that's part of it. That's part of the package deal. So
I can't believe that 95% of Americans don't have that. Guys, stop drinking your Starbucks for a month. Stop going out to lunch. You've got $400 to $500. Yeah. It's that easy. You're listening to Tuttle Talk here on the Real Estate Radio Network. My special guest today, Matt Aycock, partner in Pratt, Aycock & Associates, PLLC. This is huge issue. Do not overlook this. We have had up to a point 70% divorce rate in Dallas. I think we're resting at the 50% divorce rate now. So I know a lot of you out there have this situation. So this is not something to ignore. This is not pressure. And guess what? If both of you die, now tell me if I'm right on this, Matt. If you don't have a will, the government decides which set of in-laws get
Correct.
the kids too.
Yeah, and it may not even be the in-laws. There's a recommended path of who gets what, but yeah, I mean it's decided by the court, and I don't know that you want that.
No, you definitely don't. So here's what you have offered, and I love this. There is the what if I die, what happens when I die analysis.
Correct.
Right? So we are going to provide this. If you call us at 214-736-9696, we are going to provide you free.
Correct.
What happens if I die analysis that is going to help you decide if I died right now, would I feel like I needed a will or not? Right, Matt?
Correct. And believe it or not, I've come across some individuals where it didn't matter. They really didn't need a will. It's rare, but if you have children, you absolutely need to have one. But, I've come across some individuals where they were single, never planned to get married, don't have any kids, and they're just like, yeah, it's fine if it goes to my parents or my brothers. I don't really care what happens to it.
And if you do have a will, but it's been over a few years, if any life thing has changed since the last time you reviewed it, you got to get it checked out, yes?
Absolutely. Yeah, death, divorce, marriage, all those things impact an existing will. So, yeah, you just want to have it reviewed, which, obviously that could be part of the what happens when I die conversation. So.
Okay. So thank you for providing that. We will get that out to you. If you call us, or you can email me at questions@andytuttle.com, questions@andytuttle.com. I will send it to you. It's free. There's no obligation, but you'll find out if you really need one or not. Please do this. Please look into this and consider it. It's so important for you and your family. It's a really big deal, and it's really so inexpensive. Please take advantage of this. Your kids, your family will really appreciate it if you do take the leadership in your home and do that, especially guys out there. You're the leader of that household. That's just how you got to take the lead and do this for your family. And if your husband won't, get it done. You're listening to Tuttle Talk on the Real Estate Radio Network, 1190 AM KFXR. You know where to reach us, 214-736-9696, or become a fan of the show and get great updates like this. Get into the conversation about what's going on in our marketplace at facebook.com/Tuttle Talk. And, of course, you can catch the show if you missed it at andytuttle.com. Coming up, we're going to get with Matt again. He's going to tell us if your rental properties are really secured, and we're going to find out if Gabe's rental houses are actually properly protected. And you want to know if you won the contest, don't you? We had the Mass tickets giveaway, and we had the giveaway again for Seasons 52. So we're going to give away we're going to show you who the contest winners are, all right after this. So stay tuned.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
You'd get upset when your insurance company doesn't pay your claim. More often than not, the reason is because you didn't buy the coverage that you thought you had. Just because you have a policy does not mean that you have coverage for all of the things that may happen to your house or your car. Your education about proper insurance coverage does not have to be long and drawn out. Want some help? Call me. I'm John Allen with Texas Community Insurance, and you can reach me at 214-736-9696. Once again, that's John Allen at 214-736-9696.
Do you have an insurance strategy? When is the last time you had a policy checkup? Do these sound like odd questions to you? Well, they might if you are used to hearing insurance agents talk only about all the money they can save you on your insurance. Saving money is important, but with insurance, saving money on premium may cost you big dollars on claims. Why? Because not all policies are created equally. So, if you come across someone who does not have a clear insurance strategy, or you yourself don't, they probably need an insurance review or a policy checkup. And John Allen with Texas Community Insurance can help. He is trusted in the industry, and he has helped me and many of my clients over the years save tons of money and get properly insured. Call 214-736-9696. That's 214-736-9696, and we will personally introduce you to John Allen to get that review, get that checkup, and take care of your needs. You can also reach out on facebook.com/Tuttle Talk. And we're back! Gabe, I know you love that.
Getting better and better in that, buddy.
Yeah, baby. I'm really getting excited, getting into it. You are listening to Tuttle Talk on the Real Estate Radio Network. If you had this turned up in your car really loud, you just turned off this radio. Like, you jerk. I am your host, Andy Tuttle. This is a show about financial wellness, the local real estate market. You can reach us at 214-736-9696. You can also become a fan of the show, facebook.com/Tuttle Talk. My special guest today is Matt Aycock. He is partner at Pratt, Aycock and Associates. He's an estate planning expert, a real estate law expert, also an expert in business formations, anything that really comes under the covering of real estate and how it relates to it. Now, before the break, was setting up that most people, and I know this, aren't protected on their rental houses, because I deal with people, investors all the time, and they don't have proper protection. They either have zero protection or they just have bad entity structure. So, Matt, how do you see most of your investors come to you? How do they hold their rental properties, and what is the best way that you've seen to actually hold those rental properties?
Fortunately, most of them at least have some sort of an LLC set up already, but they not all of them. Some of them have it in their personal name, but at least they have the LLC. What a lot of them don't know, though, is that there's an even better vehicle than just the LLC, because they may have 20 rental properties in just one company, okay?
So just so you know, and I'm sure a lot of you heard this, that a lot of, because I hear a lot of real estate investor stuff, even Robert Kiyosaki and their Rich Dad Poor Dad company, which I've heard and I respect, they talk about holding individual LLCs and having a different one for each name, and it's just a nightmare of paperwork.
Correct.
But you're saying there's a better solution.
Correct, and that was the solution back in the day, up until I think 2005 is when we passed the law in Texas to be able to allow for a series LLC. It's only been about the last 2 years that we've been able to really come in and define what that means, how the IRS is going to treat it in certain instances, and that's been the big challenge over the last few years, is getting it to that point. Now, as far as Texas is concerned, there's 9 other states that also recognize it. It is very well developed, and the Texas model is what's being used everywhere. In a nutshell, it's the same thing as having the 15 different LLCs. The difference is that you don't have 15 different tax ID numbers. You don't have to do 15 different tax filings, 15 different bank accounts. You don't have to do any of that. What you have is you have your LLC, and then every time you acquire a new rental property, you issue a series. To issue a series, you complete a 2-page document. There's like 4 blanks on it. You sign it, and you put it with your corporate books. And then you put title to the property and the name of that series. Everything else is the same. If you're, most of my clients that are landlords, they're already tracking profit and loss and balance sheets by property anyway. If you're not, you should be, because otherwise you don't know whether it's profitable, profitable units. That's the only real requirement in Texas, for the most part, is that you have to be able to show profit and loss in balance sheets by unit.
Okay, which is still easier than doing an LLC individually each time.
Absolutely.
Now, how, and you're able to handle all that for investors, right? All in the same place, right? Everything in your firm.
Yeah, absolutely. We've done quite a few of these. I would say we probably do 4 or 5 a week is what we're seeing right now. And every investor that has 3 rental properties or more absolutely should do it every time, because the difference is, what people don't understand is if they have it all in one entity, just one LLC, if you have 15 properties in there and they're all paid off, and let's say somebody has a slip and fall type incident that's gonna sue you on, 34 Elm Street, okay? They sue you, they can go after all of the assets of the LLC, which includes all your other rental properties. But if you have each one of those rental properties held in a separate series, they can only go after that series. And so they can't attach to all your other assets. And so in your situation, Gabe, they can come after everything you got. So that's why we got to get you into something,
yes.
But that's the real danger, is having nothing at all.
I need to ask that question just straight in there.
Really quick, if you want to get with, because I don't want you to miss this, guys and girls, if you want to get in touch with Matt to talk about this, about if you need a series LLC or not, even if you have 2 properties but you want to grow to more, is a good idea too. Call us, 214-736-9696, or email me, questions@andytuttle.com. give you a no-obligation call with Matt. He will talk to you about this. It's so important, and it's not super expensive either, is it?
No, it's not. It's cheaper than filing 2 LLCs.
Oh, my gosh. Guys, this is a no-brainer. Don't think about it. Just do it. Okay, Gabe, what's your question, buddy?
Well, how do I do it? So, I mean, my situation is we have three rental houses.
Right.
And they're all individually held in my name. So how does that work with the mortgage? Are you just assigning title over? So, I mean, if you're acquiring a house, you can't really get that house in the LLC's name, right? You have to get in the personal name and then transfer title? Is
correct.
That how it
That's
works?
typically correct. And what most people don't realize is that the mortgage does have what's called a due on sale clause, but you don't have a duty to call up your mortgage lender and tell them, hey, for asset protection purposes, put this into an LLC that I own. You're not required to tell them that. If by some reason they find out and they're not okay with it, then you have a period of time in which you can cure the defect before they could ever accelerate the mortgage or foreclose. And that cure would just be to file a deed back into your individual name.
So did you hear that real quick? I have to cut in, Matt, because I know a lot of you, when you read, that's one of the reasons you don't do that. You're like, oh, I can't do that because then due on sale. Guys, that's a myth conception. That's what we're talking about, because you have a cure. There's a cure in there. They're not just going to go, well, too bad, buddy. Right, Matt?
That's correct. And Andy, more importantly, I've been in this industry for about 11 years. I've never seen it happen. It might, but I've never seen or heard of it ever happening to anybody. So as long as you're paying, it's not going to come up. But what you do is you first set up the Series LLC, which takes about 2 days. We have a questionnaire that you can just complete. It's very, very easy to understand and follow. We tell you how to manage it. We give you all the documents that you're going to need to manage it, so you don't have to come back to us constantly, to like pay more legal fees or anything. You can do it all yourself. And then what happens is you would just go ahead and you would transfer your properties, 1 deed per property, and just kind of put them all in your LLC. I mean, you said you had 3?
Mm-hmm. Yes.
You could probably have that completely done in a week to where you wouldn't have to worry about anything more. The only issue in your situation is you would have to have an additional tax filing, just for the LLC, of course, because it's gonna file taxes and then issue a K-1 to you that you're gonna put on your personal return.
And what's the fees? And I mean,
yes.
How does that work? Is it a one-time deal to set up?
Correct.
Okay.
Yeah, it's a one-time deal to set up. I charge $1,250 to do a Series LLC. That includes the $300 filing fee with the state. If it's a conversion, it's $1,100 because the fee with the state is only like $150. So
that is nothing for an LLC setup,
Sure.
by the way, guys. That's a very, very, very reasonable offer. So that's good stuff, Matt. Thank you.
yes,
And I would need 3 of those or just one?
just one.
Just one, and you just
And
file
you
a
could-
separate series per.
Correct. And
Got it.
And
Okay.
the series will take you literally 5 minutes to fill out the document. I mean, it's the greatest thing ever. I
So
love
just so I can get clarity on that too for Gabe. So if he did 3 separate LLCs, not only is it more paperwork, but it's going to cost him more to set those up.
Yeah, well, the filing fees alone on 3 separate LLCs would be $900, and then he's going to have to pay, some accountant to do at least a minimal tax filing for each one of them. So, I mean, that's at least going to be $1,000 a piece every year, I would guess.
Sure.
And so, I mean, it gets astronomical very quickly.
So even though because typically, they talk about piercing the veil, and whether that's in an S corp, any kind of entity protection that you have. So this is what's interesting to me, because typically with an LLC, they can't go after another LLC unless you're commingling or doing something like that. Then they can have
Correct.
reason to go after both. But in a series, you say you have one bank account. So even though you're sharing all those funds, they can't go after the other properties. How does that work?
They can go after the cash as to what amount of the cash is related to the balance sheet of the series that they're suing. So you do have to keep that in mind. But they are capped. They're limited to only being able to go after the assets of the series. So that's really, as long as you keep everything very separate from a bookkeeping standpoint, it's pretty easy to deal with. We use QuickBooks for ours. But I do real estate investing as well. So for our properties, we use QuickBooks. And within QuickBooks, there's a feature called Class, and you just set up a class with that series name, which I always make the property name because it's easier to keep up with. And then whenever you book your rental income or your expenses or whatever, you just designate it to that class. And then it'll automatically track your P&L and your balance sheet for you. You don't have to worry about it.
You're listening to Tuttle Talk on the Real Estate Radio Network. My special guest today, Matt Aycock. He's an estate planning expert. He's a real estate law expert. He's talking about series LLCs, how to protect your property correctly in all your properties, rental houses, and any really real estate that you have. And Gabe over here, who's owning a lot of properties, I think learning a few things. I'm learning a few things because I actually didn't know about the Series LLC until we've had a conversation a few months ago, because I've sent you some people that I think you're working with on that. But a lot of people that I've talked to, I'm going to do an S Corp or something, because they don't know for real estate. So I've talked about this before, and I know you've heard me, but I want to give you some credibility. I want to get some credibility to myself for what I say. Matt, would you please tell my listeners, why is an LLC the correct way to hold real estate?
There's a lot of reasons. The big one for me is that with an LLC, you can have flexibility of how you move money in and out, a lot more flexibility there. If you have,
because it's a pass-through entity.
Correct. With the S Corp, everybody thinks there's an S Corp and a C Corp. Really, there's just a corporation, and whether it's an S or a C is how you're paying taxes. It doesn't have as much to do with how you manage the entity. If you're in a relationship with like multiple people owning an entity, it's easier with an LLC for you to have uneven equities and to be able to put more money in at different rates and whatnot, and to track that in a more informal way. Also, with a corporation, you have to have all your meetings and your minutes, and you just got to keep up with so much stuff. There's so much more formalities to them that most people don't do that. They just set it up, set the book down, and never ever pick it up again. And so they don't really have a corporation at that point.
Right.
Because they're not formal.
And so the LLC gives you also with real estate, isn't there some different ways that it allows you to write off what you're doing with the real estate? Doesn't it give you more flexibility there?
Yeah, from a tax standpoint, there are some pretty significant differences in the way that you can have retained earnings. In a corporate structure, you can do like retained earnings and different things of that, like that. But the big issue with the difference between the two is going to be how your passive income is classified. Not being a tax attorney or a CPA, I don't want to really go into that too much.
I'm going to bring a CPA on in a couple of weeks. Mike Dunlap's going to be here. We'll go into the tax implications of that.
Because it's a big difference, and you probably want to share that with your listeners for sure.
So come back, and I think it's 2 weeks. I'm going to have Mike Dunlap here to talk to you about really what's going on. It's tax season, so we're going to talk to you about some serious tips you need to take into account, but also we're going to discuss the real estate and your real estate. Gabe, did you have any more questions for Matt on this?
Not on the air. We're definitely going to talk off the air. I think
right?
It's
That's fantastic.
Enough knowledge learned, but we'll definitely be getting this set up.
Yeah, for sure.
Good.
And in rental property, I do want to stress to people that, if you're looking for a way to make an investment right now, rental property is a phenomenal investment. I personally do it. I try to do as many as I possibly can. It's 20% down, 80% leverage, and you're probably going to be paying like 4.5, somewhere around in there.
Low fours right now.
And
on the size of the property.
You really are going to have to try to not be able to cash flow right now on rental property with where rates are. And once they hit about 7% or so, assuming they ever go back up to that level anytime soon, that's when it starts becoming less attractive to get into a leveraged landlord position. But rental property is great. You're building wealth, and it's a wealth planning tool. The buy and hold strategy, it's a huge strategy.
Huge strategy. Matt, thank you so much. As being an expert contributor to the show now, we're going to have you back just about every week to keep giving estate planning tips. So I really appreciate you being generous enough to do that.
Hey, thanks so much, Andy. I appreciate you having me on the show.
You bet. Okay, guys, before I let you go here, I want you to remind you, the analysis that Matt has decided to provide that I'm going to give to you if you email me is the what would happen if I die analysis. So find out if you would be okay without a will right now. And you may be, but it's going to be rare. That is free. We'll give you that analysis if you email me at questions@andytuttle.com or call 214-736-9696. Also, if you're an investor, call those numbers, get your properties protected correctly. It's so much less expensive. The due on sale clause is a myth. It's true, but you have a chance to cure. It's not a disaster, and it never happens as long as you pay your payment. That's the thing you need to understand. Okay, guys, here are the winners. Contest. Drum roll, please. Thank you. Very good, Gabe. Very good, Gabe. I think we have actual sound effects we could do that with, but I love it. So, for the Mavs tickets from Ticketstock this last weekend, Michael Stevens. Congratulations to Michael Stevens for winning the Mavs tickets, and congratulations to Austin James for winning the dining certificate to Seasons 52. We'll have more contests and great prizes coming up for you. Thank you, everyone who came out to take a stock this last weekend. It was fantastic. Our loan originators, our mortgage coaches are having a great time. If you know of a loan originator that is looking for a better company to work for that really cares about the homeowner process and helping people make smarter decisions about that, or if you yourself are one or would like to look into that opportunity, we are hiring. We would love to have you on board. Great culture and people that have big hearts and have a really work hard at making sure to help homeowners. So come on board with us. We would love to talk to you about that. Guys, you're listening to Tuttle Talk. I hope you have enjoyed this last hour. If you want to get a hold of us, you know the number. Call me, 214-736-9696. And don't forget to go to yourmortgagereview.com. Yourmortgagereview.com. Fill out a quick form. Find out if you can save money by restructuring your financing, or find out where you sit as far as qualifying to purchase a home. We'll give you that free copy of your credit report with some tips on how to improve that as well. Speaking of credit tips, next week, got to tune in, guys. Justin Nichols, owner of another law firm, specializes in credit restoration. He can really make things happen for you. He is going to give you the 5 C's of credit, and we're going to talk about how you can, on your own, improve your credit to get to where you need to go, not just for buying a house, but cars, credit cards, anything else that you need. We will help you with that next week here at the same time. I'd like to thank Gabe. I'd like to thank Matt for being here. I'd also like to thank Danny Miles, our production director, and the entire family here at KFXR. That's it for today. Race Talk is coming up next. This is Andy Tuttle for the Real Estate Radio Network. Tune in next Saturday, and thank you for helping us make financial intelligence a priority in our community. Have a great weekend.